Okay, we've got the numbers, the monthly numbers for the mutual fund industry coming through. Net equity outflow has come in at 3,991 crores. This compares to 1,009 crores the previous month. That is the month of September. So almost a fourfold jump in outflows is what we've seen. Actually, it is a fourfold outflow increase that we've seen in equity component. 3,991 crores negative as compared to 1,009 crores. So this is the fourth month running that we've seen money being pulled out of equity mutual funds, equity schemes basically. And of course, this is the net number. This is basically almost back at the trend high. I mean, August saw about 4,029 crores, and we are at 4,000 crores back again in the month of October. I mean, to be fair, all the mutual fund CIOs or CEOs we've spoken with over the last 15 days have been sort of talking about the fact that they do expect inflows have been pretty weak, redemptions have been high for a bunch of reasons which we will get to, and they were expecting a negative number in October as well, and that is exactly what has happened now that the official numbers are out. Some category-wise details also. Hybrid fund outflows have come in at 1,682 crores. This was 4,200 crores same period last month. And then we will put out other category-wise data as well. Liquid funds, for example, will come up. I mean, a bunch of others as well. Debt schemes, for example, is another category which we will look at separately as well. I think we're getting some reaction starting to come through. Of course, I mean, the number which is of highest interest is the equity category, which is seen, as I said, nearly 4,000 crores of outflows. Let's get some opinion in as we keep flashing and updating more numbers from the data sheet which AMFI puts up on its website. Vishal Kapoor is CEO at IDFC Asset Management Company. Swaroop Mohanty is CEO at Mirae Asset Global Investments. Thanks very much, both of you, Vishal and Swaroop, for joining us. Vishal, is this a little higher than what you thought the number would be at the net level? First thoughts?
I think it's as expected. So as you mentioned, we have been seeing net outflows for a few months now. So I think, this is ballpark, I think, what the industry would be expecting. Good to see that at least on the debt side, there has been a very sharp and smart recovery this month, as the numbers indicate. But equity, I think, has been a net outflow month and continues so far in October as well, as this data confirms now.
Swaroop, can you throw some more color on how the inflows as well, the gross inflows as well as the gross outflows were? Did we just see high redemptions? Because in the month of October, markets did pretty well, so there was a lot of profit booking. Can you throw some more color at the gross level? What happened in the month gone by?
I would expect the gross levels to be the same as last month. It's just that the redemptions continue to be higher. Please understand there's a lot of noise around every investor, and it's probably the 8th month of sitting at home, and the COVID acts as a riskometer for everybody. So we are seeing some amount of that adjustment. When you put that in perspective, 3,000-4,000 crores outflow net is what we had expected, and it is in that line. So I won't see any change from the previous month data is the way I would put it. I'll wait for the SIP numbers to come out, because I've been seeing in our case an SIP number reversal, which is a good sign. And if that comes about, I think it should be okay.
And SIP in the month of September was 7,788 crores. So as you said, Swaroop, we are waiting for the SIP number for the month of October. But Swaroop, you said there's a lot of noise. Is this the gross number would be broadly similar, but redemptions have gone up. Is this profit booking at high levels, you would imagine? And which category of funds within the equity schemes would have seen, the bulk of this?
Yeah, I think the large cap and the multi-cap due to the issue which has now got sorted, I believe, we'll see a reversal of trend from this month. But these two were the main categories which have gone out. Please understand, people always punish performers and hold laggards close to their heart. So this is some positive money on the large cap. So we've seen some of the large distribution houses giving out a sell call on the large caps, which is the result of this. But to answer your question, it's large cap, multi-cap, and the hybrid continues on its trend of negative, and that will continue.
And Vishal, do you think this trend of high redemptions will continue even in the month of November? How have the first 10 days panned out?
So far from what I can see, I think the trend does continue. Like Swaroop mentioned, I think a combination of factors, including some amount of concern around at least optically, the valuations looking very high, and therefore maybe the expectation building up at some level that there'll be corrections, people keeping money in the liquid plus category, which is some category that you would have seen has grown quite steadily over the last several months. I think, again, instead of reading too much into the data, this does seem to sort of continue the trend that we've seen over the last few months. I would think that if there are pullbacks or some corrections, you might expect a fair amount of smart money to look at coming back. But the valuation levels at current earnings does seem to indicate to many investors that, equity is something that, like Swaroop mentioned, many houses have given calls to be cautious at this time.
Swaroop, any other category you would watch out for? I mean, we are putting up some other information which is coming through, but I think we are still awaiting numbers on the liquid side, etc. Any other categories in focus
I can
for you, Swaroop?
In front of me. Yeah, the numbers are out, and if you can see, as guessed, the multi-cap saw the highest amount of redemption. We are net 1,900 negative, and the good part, as Vishal is echoing, there's a flight to safety, and you see that in the corresponding side, in the bank and PSU fund on the red side, continuing its second month of dramatic inflow. We are around 5,500 crores inflow into the bank and PSU. So just speaks of the, mental status of people now. There is a distinct flight to safety, and some of that getting corrected now. It's good that these categories are getting good money because the core part of the debt side is also getting inflows, which is on the, on the longer end is very good for the industry overall.
Okay, so that's the breakup in terms of, category-wise. Swaroop, any thoughts on the liquid funds? Because that has seen inflows this month, vis-a-vis outflows in the prior month.
Yes, I mean, my personal opinion is there comes a time when the investor sort of mitigates the return and are now used to the returns that are there on the liquid funds, and hence we're seeing stability. Please understand, last month was an aberration. Money had to go out because of the end of the month. But this month we've seen inflows, and if you've seen the corporate debt fund across, look at short duration, medium duration, corporate bond fund. Corporate bond fund is 15,000 net positive. So we're seeing one of the best inflows on the debt side for a long time. Please understand, we've seen a secular sort of equity inflow for 5-6 years, which is now tapering down. And it's good that we are seeing some core money coming into the debt side at this moment of time. So it's a basic flight to safety, but people are now waking up to the new returns that are there in the industry. And once it falls into place, people will come back to normalcy is an opinion.
Do you share that opinion, Vishal? Because it's sort of widely held that lower rates are here to stay. So that is the new reality, and that means more money comes into asset classes like stocks.
So I think medium term, yes. I think what could be happening, just echoing what Swaroop said, is that if investors are displaying a cautious approach, the first stance would be keep money in safe places, which is fixed income, and that too in the high quality buckets over there. So banking and PSU, corporate debt, short-term funds, etc., is where we've seen steady inflows. I wouldn't rule out positive or the momentum sort of changing in equity should there be a correction. I think we've seen several times now, and the last one being March, when the markets corrected very rapidly. You'll recall that March had almost record gross and net inflows into equity. So while, of course, the core investor is still a long-term investor, I think 2-3 factors we have to keep in mind is that with the current move in the market being broad-based as opposed to a very narrow market move over the last few years, broad-based market move has meant that several portfolios now come back into the black. So the 3-year holding period for many SIP investors as well as longer-term investors now well into profit. And with that, with a cautious approach, you can understand some investors wanting to take the comfort of debt and high quality debt at that. The second is smart money, which may have come in March and April and may have booked some amount of profits. Because like I said, valuations have looked a bit stretched with the new earnings numbers this quarter, as expected, to be a bit muted. But I won't rule out, if a correction were to happen, for a lot of money to come back into equity. So for now, I think core debt growth, despite the headline rates, is what I guess we may want to expect. But don't rule out an equity performance in terms of flows getting reversed if there were some corrections.
Well, and I guess there was also that U.S. election uncertainty. That was a big event risk in the month of November. And a lot of, mutual funds as well as retail investors may have wanted to avoid that. And plus, they were sitting on pretty good gains in the month of October. So I guess that could have also resulted in some amount of profit booking. Swaroop, corporate bond inflows in the month of October are at a 2-year high. What do you make of that?
I mean, I can only look at positives from all this because, finally we are seeing now, please understand, an investor in debt has to be there, at least on the individual investor side, is a 3-year money at the basis of investments today on the debt side. So we are looking at very strong, like we see the large cap and the multi-cap being the core on the equity side. We are seeing the corporate bond fund and the bank and PSU fund becoming the core of the investments for the debt investor. And when you see these kind of inflows, some of it could be institutional last month also. But if you've seen this trend, it's been holding that trend for some time now, the corporate bond fund and the bank and PSU fund. I mean, so this is here to stay, and it's a good thing. I mean, it's probably 10 years ago when we used to see these kind of flows into the core debt funds. I think I see those days coming back, which will be good for the industry. Because if you see at the overall industry level, the industry AUM had gone up to 51% of individual investor holding, which has tapered down to 49%. We have to get it back to that level, and I see these two funds really getting it back there, and folios being created on the debt side augurs well for the industry in the long run. Is something. But just like to add on the equity side, what Vishal said is absolutely correct, is that some of the smart money has been coming in as Vishal rightfully predicted. The last 3 months have been good for us as a fund house on the inflow, so we are not complaining. We've seen a fair amount of inflow both on the SIP as well as the net sales side. The figures are transparent today, so it's easy to find them out. So I think broadly there is some shift happening, and it's all for the good.
Gentlemen, thank you very much for joining in. That's the word from Swaroop as well as Vishal. For those of you who've just tuned in, AMFI has released the October mutual fund data, and equities continue to see outflows for the 4th consecutive month. In the month of October, outflows as total equity of outflows stand at nearly 4,000 crore rupees, which compares with 1,000 crores roughly in the month of September. So a 4-fold jump there. So experts tell us that redemptions continue to remain high. Markets have given you good returns in the month of October. So there was some profit booking by smart money. Liquid funds saw inflows after 2 months of outflows. October corporate bond inflows were the highest that we've seen in the last 2 years, and inflows in debt schemes are the biggest that we've seen since October of 2019, which is a year high. So money has moved away from equities as some amount of profit booking took place into debt in the month gone by. On that note, we'll slip into a break. We'll come back. Stay tuned.